Welcome to the weekly market analysis for the week ending 18th February. We all know that we have been seeing very volatile markets recently, with the FIS withdrawing their money, and we have been seeing some bearish biases in the market. So looking at the chart, we can see that this range 16,760 to 17,640 have been a strong range where the Nifty moved a lot, and we are currently in this range and just below the 100 DMA. The Nifty is still well above the 200 DMA. So we have two defined ranges now within which the market is likely to move for the next couple of months maybe. The shorter range is the strong range where the probability of the price movement with this range is very high. This is the range 16,760 to 17,640, and the broader range is 16,410 to 18,350. Now for us, the 16,410 is the very critical zone or area where below which the Nifty will go into a bearish zone. Till that time, it will be moving in a sideways range. Since our markets are quite influenced by the US markets, let's look at the US markets as well. First, let's look at the Dow Jones Index. We had seen that the Dow Jones getting support from the earlier support zone of 33940 and 33640 and recovered quite smartly and went up above the 3 moving averages and 200 DMA, but again it faced resistance in the previous rejection of the supply zone, and it has come down again, and it's now gone below the moving averages and the 200 DMA and is fast approaching the earlier support zone. The probability of getting support in this zone of 33940, 33640 is quite high, and the Lakshman Rekha here is the 33130, below which we will see much deeper downside, but at the moment the probability of getting support around this region is quite high. Now let us look at the S&P 500 index as well. The behavior of S&P 500 is quite similar to the Dow Jones. It has come down below the 3 moving averages and the 200 DMA and is fast approaching the earlier support zone of 4278, 4300, which had given support multiple times, and our Lakshman Rekha here is 4222, and the probability of getting support around this level, that is 4278 and 4300, is quite high, and in that case the market is most likely to move sideways in the near future. Coming back to our markets, let's look at the NSE 500, which is an indication for the broader market. The NSE 500 has been moving in a sideways range for quite some time, except of course for this up move. It has been moving broadly in this range of 14402 and 15210. So this is the stronger range, and down below we have the support zone of 14128 and 14402. The NSE 500 also has gone below the 3 moving averages and the 100 DMA, but still holding above the 200 DMA. So the NSE 500 is most likely to move in this stronger range of 14,402 to 15,210 in the coming weeks and maybe a couple of months in this range. Let us now look at the various sectors. First we will look at the bank Nifty. The banking sector is one of the sectors which made smart recovery after a big down move here. It was bearish for quite some time and then it made a smart recovery, and currently it is moving in a sideways range. And the Bank Nifty was unable to cross this price rejection zone of 3855 and 39425. As you can clearly see, the price rejection happened in this zone. On a shorter term, it has been making lower highs and lower lows, and it has established a short range which is between 3675 and 38855, and the Bank Nifty is likely to move in this range in the coming weeks and maybe a couple of months. And we have a broader range where we have 33908 and 41829 on the top. So the Nifty, as long as it maintains within this broader range itself, it will be in the sideways move until the market establishes a strong directional trend. Next, let us look at the metal sector. The Nifty metal index has been moving sideways for almost 8 months from the last August, except of course for this attempt to break out, but it did not succeed, and also a recent attempt to break out did not succeed. But overall it has been moving in this particular range. So the crucial level to cross above is the 5936 is the level, and the recent bias of course has been upwards. As you can see, there is a small upward channel being established, but still it has not succeeded to move beyond or cross the price rejection zone successfully and establish an uptrend. But looking at the market, this chances of a breakout soon is quite unlikely, and most probably the Nifty metals will be in this upward inclined channel. So more of sideways and less of upwards, but overall bias could be upwards. Next, let us look at the auto sector. The auto sector has been one of the stronger sectors, as you can clearly see from the chart. It is still maintaining above the 50, 100 and 200 DMAs. Of course, recently it has been moving more of sideways, but the overall bearishness which is seen across the market is not reflected much here. And we have a tough rejection zone which is 11766 and 12140. All earlier attempts have failed to cross this zone, so we need to cross this zone to establish a higher trend. But looking at the market conditions, the sideways move is likely to continue, and the breakout above this price rejection zone is not likely in the near future. But overall, as you can clearly see from the chart, with all the moving averages getting inclined upwards, the overall bias is upwards, but a clear breakout and an uptrend is not likely soon. Next, let's look at the energy sector. This is one of the sectors which has been showing strength in recent times. This sector showed a lot of weakness during the last quarter of 2021, and this year it had shown a lot of strength as well. As you can see, it is above the three moving averages 100 and 200 DMAs, but it has not been able to breach above the last price rejection zone, which is at 24766 and 25345. Now, though it is showing strength, going by the overall market trend, we can expect some more sideways movement before a breakout above the price rejection zone. So though it is positive, we can expect more sideways moves. Next, we will look at the financial services sector. This sector, also in line with the banking sector, has been moving sideways. Now we have two ranges, one a minor range and a major range. The index have been spending more time in the minor range, and we expect that this will continue in the near future as well. So we can expect a sideways range within this minor range, which is 17,282 and 18,355, and we have a major range which is 18,747 and 16,779. The sideways movement will continue as long as this is within this range or a trend on either side breaks out. Next, we will look at the commodity sector. The Nifty Commodities Index have been moving sideways for the last 6 months, and this trend is likely to continue till the market establishes a clear direction on either side. A quick look at the infrastructure sector. These two has been moving sideways from last October, and it has not been able to cross the price rejection zone between 5269 and 5362 even after 3 attempts. Now it is showing some weakness. It is below the 3 moving averages, but still maintaining about the 200 DMA. But overall movement has been sideways, and we expect it to continue this sideways movement, and do not expect a breakout soon above the price rejection zone. Now let us look at the weak sectors. The pharma sector seems to be the weakest of the lot. It has been showing weakness from last October and has been moving in a downward channel. Now it is below the 3 moving averages, the 100 DMA and even the 200 DMA, clearly showing there is weakness. Currently it is at a support zone of 13,145 and 13,200, and it is more likely move towards the bottom of the channel. So this is one sector we should avoid, but one can be very stock specific, looking at the specific chart moments only, but overall the sector need to be avoided. Fmcg sector is one sector which again has been in weakness from last September onwards, and it is below all the moving averages and has been moving in a downward channel, and so a sector to be avoided. Next, the realty sector, that is also showing weakness. It's moving in a downward channel. It is below the 3 EMAs and the 100 DMA as well, but still maintaining above the 200 DMA, but still the bias is negative, sector to be avoided. The media sector has been showing weakness from last December onwards, and it is again moving in a downward channels, but it's still holding above the 200 DME, but the overall bias is negative, so another sector to be avoided. Finally, one look at the Nifty consumption, which is again showing negative bias, which has been showing weakness from last October, moving in a downward kind of channel, but still holding above the 200 DME. So, but since overall bias is negative, a sector which we need to avoid. To finally summarize, the market is likely to move in a sideways range of 16,760 and 17,640 in the near future, and we have a wider range for sideways movement between 16,410 to 18,350. The sideways movement will be there till these two limits are maintained. Above 18,350 we will be looking at an uptrend, and below 16,410 we will be looking at a downtrend. And on sectors, comparatively stronger sectors are the banking, energy and auto. Sectors to avoid are the pharma, FMCG, consumptions, media, realty. Sectors which are likely to move sideways are the metal ones, the commodities, fin services and infra. I think that concludes this weekly update on the market.